Hello, everyone, and thank you for joining us to the VC panel as part of Business Insider Global Trend Festival. My name is Mor Aini, and I am the Strategic Partnerships and Growth at APX. APX is a joint venture of Axel Springer and Porsche. We were founded in 2019, and since then we invested in almost 60 startups from all over the world in different industries. Today, we are hosting here 4 different VCs from Europe, and we are going to hear from them about the challenges, opportunities, and changes that COVID-19 brought to the VC ecosystem. So thank you very much, Kevin, Henric, Chris, and Judith, for being here with me today in the virtual stage. I would say that we just kind of like continue with the first question. So first of all, we want to hear a little bit more about you and about the VC. So if you can tell us in which stage, industry, and geography are you investing? And more, we would like to hear in how many startups you invested since COVID-19 started. So I would say from March until now. So maybe Chris, let's start with you.
Yeah, so we normally invest in seed stage startups up to Series A. We have a CVC for the BizLab, as well a small capital fund. To do so, covering all the Airbus sector, aerospace startups, and also adjacent. And your second question: how many startups we have invested since the crisis began? And must have been around 2 startups.
That's interesting. So just for those of you who don't know, Chris is the global head of Airbus BizLab. Chris, do you want to say one more sentence about Airbus BizLab?
Yeah, sure. So the innovation landscape of Airbus is structured in stuff we do internally, meaning the BizLab. So we build ventures on top of aerospace challenges, but we also partner with startups. Investments then come from the CVC Airbus Ventures. So that's how we normally operate. Very aerospace sectory topics, but also adjacent topics such as quantum computing, what we do with blockchain and AI as well. No secret, since the crisis severely hit, we also moved into more incremental innovation supporting the core business of Airbus to get back to track.
Thank you very much. Judith, the same question goes to you.
Thank you. So my name is Judith. I'm a partner with La Famiglia. We are an early stage venture capital fund based in Berlin, but our team is actually distributed around Europe. We invest into companies that enable or disrupt large established industries at the seed stage, typically writing checks of between 500,000 and 1.5 million euros. And we invest within Europe as well as the US. Since COVID started, we've actually made 3 investments, and we've currently signed 2 term sheets for follow-on investments for the second fund that we launched towards the end of last year. So we've been relatively active. We typically make between 8 to 10 investments per year and about 30 investments per fund. So that's a little bit of the backstory and our activity level despite the COVID crisis.
Thank you very much. Kevin?
Very nice to be here. Thanks for having me. So my name is Kevin. I'm a managing partner at Remagine Ventures. We are a seed and pre-seed fund, mainly focused on, although we do have a partner in London and are looking at opportunities in Europe as well. We invest mainly in immersive and interactive technologies that change the way consumers spend their time and their money. So that includes entertainment, gaming, e-commerce, essential consumer needs, sports, and such. Since COVID, we've made 3 new investments and 1 follow-up investment.
Very interesting. And Henric?
Thanks. My name is Henric. We are doing pre-seed investments. That typically means we're the first investor into startups. We do this cross industries, really broad, no focus in that sense. We invest in companies from Europe, sometimes Israel, and sometimes even beyond. So far, if you look at the COVID situation, we've still done a lot of investing, 19 investments, 19 since March.
Very impressive. So as all of us can hear, we are talking about here different numbers, and it means that actually COVID changed the game for all of us. But the VCs are always investing, although I would say, pandemic. And then it leads me to actually my first question that goes to all of you. In what ways do you feel that COVID-19 actually changed the way you invest, but also challenged, and which kind of opportunities do you feel these times brought to you as a VC? We will start with you, Henric. So maybe if you can divide it to challenge, change, and opportunity.
Yes, maybe to start with, for pre-seed, if we are the first investor, I mean, it's this rule that everybody else knows and adheres to as well. But for us, it's especially true. The team is the most important thing. So the main challenge right now is to make a selection that is based just on video calls. However, this is something that we have been doing already since we started. And while we still prefer to see teams also live in person, we decided from the get-go that we want to be able to have interviews and conversations also fully digital. So we've been doing this since the beginning. So we haven't really changed a lot there. But still, this is a challenge because you need to make sure that obviously equipment and processes around this are working well, the technology behind this, so that this is really a smooth experience. With regard to opportunities, I would say, obviously, if you do this, you are able to talk to more people because you don't have to meet in person, quite obvious. So that leads to a bigger deal flow. And that is something that creates opportunities for the selection of new ventures.
Thank you very much, Henric. Kevin.
I think everybody's going to echo that the challenges are certainly around meeting the teams, and that everything has shifted to Zoom or whatever else you use, and that made it a lot more difficult to assess teams. It also made it more difficult to understand and assess the dynamic in between. What also I used to like to do is I like to visit the teams and see how they work, see their offices, understand a little bit the culture they're thinking of building. So all that is somewhat lost, and that I believe for everybody here who does early stage seed, pre-seed investing has become a lot more challenging. I think opportunities I see, and we view opportunities mainly around how COVID is impacting certain industries. Given that we invest in consumer, but also in B2B, and along both lines, we see opportunities in how, whether that's acceleration of online behavior such as e-commerce and shopping, but also to sort of the videos. I think we see a lot of opportunities that will come out of COVID, and we see, as Henric said, we see quite a lot of ability to just quickly take a Zoom meeting makes that a lot more easier. I also see myself challenging as a bit the management of those Zoom meetings and keeping them intact. And what was the last question? Well, yeah, challenges, opportunities, and sort of wrap that up.
Yeah. Thank you very much. Judith, how do you see it from your point of view?
Yeah, so from our perspective, when it comes to change, not that much has changed, and that's due to two reasons. Our team has always been a remote team, so part of our team sits in London, in Munich, and in the south of Germany, and so we've always worked together remotely, and remote due diligence has always been a part of our process. I think the other thing that didn't really change for us is we invest into B2B focused companies that enable or disrupt large established industries. So we've never had a big footprint or exposure when it comes, for example, to travel, hospitality, and that whole space, which I think has been the space that was hardest affected by COVID. And so also from that perspective, in terms of the companies that we look for, we haven't really seen a lot of change. I think what is a challenge definitely for our portfolio, despite not being exposed to travel and these types of sectors, is especially companies that are selling into the likes of Airbus, so big OEMs or manufacturing. So typically, no matter what company you go to, I think every budget above 10K has been frozen or needs, a lot of sign off from very, very high levels within the company, which obviously doesn't make the whole job of scaling very quickly easier for companies. So that is a challenge that we see in the near term. Now, speaking about opportunities, I think that's also an opportunity, because what we see is that throughout the kind of industrial B2B ecosystem in Europe, a lot of strategic topics when it comes to making their organizations leaner, doing more with less resources. Also the whole trend of nearshoring, which means, getting work that was previously done in Asia or elsewhere back into Europe, and the associated labor cost really means that companies need to automate. Companies need to think about how they can save cost and how they can drive value for their end customers. And so I think that has put a lot of startups also in maybe more outlandish fields like robotics or, really strong deep tech solutions, a lot more on the agenda of those companies. And so I think in the kind of the mid to long term, that is going to be a huge opportunity. I think the other thing that we definitely see, and I think it comes back to what Kevin just said around due diligence, I think it definitely is difficult forming a connection with an entrepreneur if it's just on Zoom. I think the due diligence part is something that, through the questions we ask and through the time that we spend with entrepreneurs, we can kind of, still alleviate. I think the building conviction on the entrepreneur side in case the deal gets competitive. So, things that VCs used to do in the past, like fly to the entrepreneur, kind of camp outside their office, take them out for lunch or dinner, and also form a connection towards them and also presenting what you're building. I think that has become a lot more difficult with COVID because the only means of connection you have is kind of, Zoom. And so we've done crazy things like, recording videos and sending them to entrepreneurs to kind of also convey the spirit of La Famiglia. But obviously that's not the same as meeting someone face to face.
Yeah, definitely. Chris, how do you see it from your point of view and from Airbus Labs?
Yeah, so many thanks. Before, I think a lot of it has been said. For us, especially, there was a very fast shift in the focus fields we had. So we were very front running, taking a look at content when the crisis hit. We had an immediate focus on what could benefit within the next 18 and 24 months. Also, all the plans we had made with the entrepreneurs before with other activities than getting POCs done with the startups or any scaling activities. So this is a huge challenge, but it also brings a lot of opportunities for things, especially in a very manufacturing heavy industry as we are, should have been done years ago. Digitizing, automating, shop floor, or even where do we get the data out of and what do we do with it? So it brings a lot of opportunities on other more short-term impact things, and on top as well, how do we communicate with a workforce that is very used to sitting in physical spaces and physical clusters. This is something very new to our industry, which is a very traditional industry. On the other hand, it was very I would say funny if it wasn't that tragic. But startups that were doing something very differently, suddenly they all pivoted towards a solution to fight the pandemic. Some of them were reasonable, a lot of them were just delusional. So we also saw that from our portfolio. I truly believe that not many of them, or most of them, well, many of them are struggling at the moment. Some of them might survive, but a couple of only might get stronger out of this. So a complete shift of the industry, and also an industry that is severely hit about this situation, trying to juggle on a high level of uncertainty what will come. But still, I think it has a lot of opportunities to bring impact. And with investments we've done so far, these are more present topics than future topics.
Yeah, I totally get it. I think in every crisis, you need to see also an opportunity. And that's why I guess we're all here to discuss it. Judith, I want to get back to you. As you mentioned, you invest not only in Europe, but also in the US. From your point of view, can you maybe elaborate a little bit more on how things are going now with everything related to the US ecosystem in regarding to investments, especially from, I would say, VCs?
Yeah, so in the US, we have a strict co-investment policy. So we don't have a team on the ground, which means that we always work with local funds and only invest as a co-investor. We never lead rounds. Actually, when it comes to our portfolio in the US, a lot of them have been doing tremendously well. So if I look at a company, for example, like Deal, that we invested in about 1.5 years ago, they just raised a Series B from Spark Capital and Andreessen Horowitz. They're in the area of kind of remote work payments, so they make it easier for you to hire contractors and pay them anywhere in the world. And so a company like this obviously gets huge tailwinds from the current crisis. And we've seen growth capital in the US also reflecting that and being able and willing to, make bold bets despite the crisis. So I think from our perspective, there isn't really a lot of difference in between how US companies versus European companies deal with the crisis. I think what we're seeing more and more is a lot more of an international landscape in VC. So we see, very strong European founders being able to attract funding from the US. We see European funds also forming ties in the US. And so it's kind of a back and forth in between those two different regions. And so I wouldn't be able to say that we see, kind of very stark differences in between how Europe has coped with the challenge versus the US have coped with the challenge, even though I would definitely say that because the US ecosystem is a little bit more mature than the European ecosystem in terms of overall capital available for startups and also just the time that VC has been around as a category. I think what the US has seen is, they've seen crises before. So they've been around, when the last two economic crises hit. And so I think what we definitely saw was US funds when COVID hit, kind of sending communication to all of their portfolio companies and giving very, very strong guidelines as to how they should deal with the challenge, what budget cuts, what, kind of employee changes might be required. And I think a lot of European funds were looking to the US funds for guidance in that moment, because I think the ecosystem here is a little bit more nascent. And thus we're kind of, waiting for input from other sources as well.
Thank you very much. Kevin, back to you, as your main focus is Israel. How do you see the changes or the differences between Israel and how the VC ecosystem cope with that situation, comparing to what's going on in Europe or maybe or in Germany?
Sure. So, our exposure to Europe is we have exposure to Europe. It's overall still a lot more limited. I'd say that I'd like to echo that though. I'd say Israel is fairly crisis used. So we have, we've had our own crises over the last 70 years. When COVID hits, every VC and every company, I think, immediately just met with every CEO and every board and made sure that there are certain budgets in order. So budget A, B, C in case, whatever happens. Operational cuts, understanding what clients are facing, figuring out, how to sort of make sure that there's going concern. And after that dust settles, I'd say around April, May, everybody here went back to investing. Quarter, July, August, and September, we've seen activity pick up as if there was no COVID. In September, I believe we had one of the strongest investment months ever here in Israel with over $2 billion invested. A lot of that money is going toward later stage deals, and that's a trend that already existed pre-COVID. So we see a lot more Israeli companies mature. The Israeli market is maturing. It used to be that Israeli founders were selling, and that's been changing over the last decade or so. So a lot of that money is going into late stage companies. That said, we have lots of early stage deal flow. We see a lot of activity in early stage deals still. So Israel is, especially the high tech industry, is almost back to normal, and everybody's really trying to focus on what's working. In terms of it's always very B2B and software focused in Israel. Having said that, we do see a lot more consumer-facing products coming out. Again, we focus more on the software side on that end as well, less D2C. And we see a lot of gaming activity that's picking up here in Israel as well.
Thank you very much. Henric, back to you. We at APX, usually most of our portfolio companies are actually sitting with us at the office in Berlin. And I would say that's also part of the due diligence process we have with them. At the moment, slowly, startups are getting back to the office, but it's not how it used to be. How do you see it change or impact the way we do due diligence? And also, how do you think if it will ever kind of like change, or what are the opportunities that it brings with it, and the challenges, of course?
Yeah, there's always challenges when there are opportunities, I assume, and vice versa. So you're right. This is always a balanced view. And I think one point that you just implied in your question is super important for us. This is the space we want to own. We want to own the space right after our initial investment. We like to claim that we are the closest with the teams in this period of time that follows our initial investment. And this is basically what you just described to as referred to as the due diligence process. That is important for us for our follow-on decision, which can be a pro rata or even super pro rata deal, but also obviously for our network of follow-on investors for those companies, because it's a very big difference in our opinion. If you can sit with the team and work with this team for a few months and really get everything, no makeup, really directly all the insights that are occurring on a day-to-day dynamics way here, versus you are sitting with this team 5 times or 3 times even, or 7 times, but really have this only point of view from this specific day or moment. So this is a real opportunity for us that we like to really exploit, and this is now a challenge. Let's face it, for us, if we have to move away from a situation where all the founders are surrounding us. So the truth is, we'd like to have the founders here, but we decided obviously that this is not a requirement anymore. So we will really invest also in teams that can't be with us physically. And the answer to the challenge that we now have given ourselves and also to the founders is that we are in a very close exchange, meaning on a daily basis. So not just us, but also our network is basically constantly in touch with the founders, depending on their needs. I mean, we're really focusing on the specific challenges that a certain company at a certain point in time has, be it fundraising, be it financials, be it any type of structuring in the beginning of the legal side, maybe some team issues. So we're really focusing on the specific demands of each team and try to do this as best as we can virtually. However, there is some more space in our new office that we just moved. We did just an office move across the street, and in this new office, there's still some free desks because again, a lot of the teams decided to be fully virtual. But that's our solutions, that we try to be as much hands-on as we can be offline and online for those teams that are here, offline for the others online, but really try to have this very frequent exchange that is maybe even more frequent than with other teams that are here physically, but you're just not so attached every day. So this is kind of our solution on that.
Yeah, thank you very much. And I found it fascinating how all 3 of you actually mentioned that you managed to overcome, I would say, the challenges that the pandemic brought and actually see a lot of changes and opportunities. And now I'm going to kind of shift the discussion a little bit to more industry focused question. So to you, Chris, you mentioned it and we kind of touched upon it, that I would say the travel industry and the aerospace industry has been through a lot of, I would say, challenges and changes. And before Corona, we saw huge increase in someone that knows this industry. How do you see kind of the COVID-19 affected, I would say, mainly startups, but also corporates? And now, I would say, challenging time. So it's a lot of question into one question, but I'm sure you can kind of share with us a bit from your inputs and insights.
And it's a very complicated question on top. So I would say challenge is not the right word for what is happening for the travel industry. I mean, this is devastating. It's devastating for startups, and it's even devastating for 50-year-old companies, government funded, 70 billion euro companies last year. So I would say challenge is a little bit of not the right word. I mean, a big company as Airbus certainly has enough liquidity to overcome this. But certainly, if you're a startup and you were just starting to raise the first funds at the beginning of the year, I would say certainly, and we heard all the news around it, you probably do not exist anymore at this point of time. So I would say any startup or a lot of startups that were in this industry, which was a very tempting industry because there was only one way, and this was up. Certainly face a challenge now, not due to the short notice drop of market. I mean, in March we had over 98% of all airlines worldwide grounded. That's a shortfall of demand, but also this industry will get back to feet if we're very positive 2023, and if we're very realistically 2025. So this is a very long way to overcome. So we were not dealing with that many startups within classical travel industry, more tech related. Technology is something that we still need to implement. The ambition of our company is to fly zero emission in 2035. So the ambition has not changed there. But for everything, what is booking platforms or even big players like Airbnb, I think they really need to rethink the business model in a way that they could overcome the next years, which is certainly a challenge where I certainly do not have an answer for at the moment. But demand has dropped drastically, and I think this will be a structural problem the next years as well. Business travelers will not travel that much, and we're kind of getting used to this. Whereas I think a little bit of more balance between in-person and Zoom fatigue would be good. But certainly the way up is not the way it's going to be the next years.
Thank you very much for you, Chris, and for all of you, Judith, Henric, and Kevin, for being so honest and transparent and sharing your experience. And for the last question, I want to ask you something a bit different. Usually, when we ask VCs to give tips, it's usually for startups. But this time, I want to ask you to give the most important tip to other VCs that are currently struggling with understanding how do we invest in this new normal, in the digital world where you can't meet the teams and everything needs to be remote. So if there is one thing you can share with them, what would it be? I see you nodding. So Henric, you should start.
I think one thing that works. Yeah, we actually we practice what we preach, which would be also our advice here. As we all know, for virtual meetings, you have this issue around body language that gets lost. So basically, you just stare into the camera, and what Kevin also as earlier pointed out too is there is this like team dimensions, team dynamics that you can't really see. What works really well for us is, and we have completely erased any pitch moment from our selection meetings in the process of investing already in 2018, is that we really focus on an eye-level conversation. Sometimes maybe for people that are from the outside world, strange because they watch TV and they see these shows where there's the big pitches and it's all a show. But what we want to try is get rid of the show element, because this is something that you can really easily fake in a virtual setting. And we want to be really authentic and truthful in the situation. And that for us works best if we take the content and the topics and the questions down to really an eye-level discussion. How can we help the founders? What is their thinking process? How have they undergone certain pivots over the last 6 or 12 months? This is the types of questions that we ask, rather than give us your latest pitch, because this is something that I think virtually is almost useless, at least from our point of view within our selection here.
Judith, same question goes to you.
Yeah, I think I would have two perspectives on this. So the first one is what we call COVID crystal balling. And it's really, having discussions within the team, looking at the data of how COVID has changed the world and trying to figure out how that will affect the opportunities that we. I think for us, that really comes down to trying to figure out what trends are sustainable trends and changes and what changes are unsustainable changes. So I think Chris already mentioned, travel, like, is that going to go back to normal? When is that going to go back to normal? And to what level is it going to go back to normal? The same goes for education and the way that people communicate and, do work these days. Like, what of those changes are actually going to stick around? And so really kind of trying to look at the data and trying to figure out what that means for the opportunity set that is ahead of us. But I actually am a bigger fan and perspective, which is, we don't know what the future brings. And I think COVID is the best example of, things that you cannot estimate and things that, turn out completely differently than you had initially hoped. And so I think for us, it really comes down to the paradigm that I think VC has always been about, especially early stage VC, which is follow the founder and follow the amazing ideas that the people who sit in the markets that you're investing in have. I don't think it's necessarily the best use of our time to try and figure out every single last detail of information that might impact our investment decision. But at the end of the day, finding new ways of connecting with great talent and trying to follow them within the vision that they have for the world they're creating. I think, yes, Zoom is not the best medium for communication, but it's a fantastic medium for communication given the situation that we're in. So I think, just having a little bit of respect and also just kind of, thankfulness for the world that we live in and especially us as a very privileged group of people being able to continue doing the job that we love and, just kind of hoping that the one thing that I think we have to get right, which is finding outstanding talent, is not something that was in any way or form negatively shattered by COVID. So I think that's probably the perspective that I would tend to share with VCs that are struggling.
Thank you for the optimism. Chris?
I would say that the greatest learning for the last weeks was really be clear on your objectives, right? If you're from a CVC perspective, if your mother company is at the moment struggling with really giving the founders a vision or a perspective, just don't go into the talks. I mean, entrepreneurs are now at the moment where they're desperately grabbing every opportunity they can, but especially CVCs are at the moment very selective on doing those investments. And if we were in January still considering something like a wild card on sustainability, for example, this was one of the minor focuses we had back then, which is a major focus field at the moment. We certainly go into a very, very tough due diligence to take a good look at the technology, at the team, at everything that is behind this. It just means that I think if you had the chance to get an investment a couple of months ago, now it's very much more tougher and much more depicted on what kind of deliverables there can be in between 18 and 24 months. But again, I mean, there's a lot of new things coming out now. The society certainly will change. So it's going to be interesting what kind of new wildcards out there emerge on this. Ways of working certainly is one. Information, data is going to be more important than ever. So still taking those new chances that arise.
Thank you very much. Kevin, last but not least.
Sure, thank you. Okay, sure. We just have to do. We have to make do with what we have, and if it's digital conversations and communications right now, then with that we're going to have to make investments. So with reality right now is important if you want to actually make and continue doing investments. The other tip I have is that we certainly probably have a bias to then invest a bit more locally. Just because it's much easier for us here in Israel to founder, to understand who we worked with, who we went to the army with, who he was, what was his commander, his colleagues, and so forth. Because Israel is small, it's rather easy for us with a couple of phone calls to get feedback on the founders themselves. So I believe if you have that option and that opportunity, I would tend to stay a bit more in those geographies where I have a very strong network. And the last tip I have is I started asking a lot of them whether they like to play games. And if they do like to play games, I think there's nothing better than playing a game together with an entrepreneur and just having some fun. And ideally, if you want to, I recommend the game Fall Guys because it's really frustrating. You won't succeed initially, and it gives you a really good perspective on how founders react to failure, getting back up, that's sort of part of the game. So playing, just use much more of what's digitally happening. If it's Fortnite or Fall Guys or whatever it is, even a board game strategy, start playing some online games. And that's a good way to understand a bit more about him personally than in some sort of structured Zoom pitch.
Thank you for this, I would say, innovative approach. I think it's fascinating, and I'm sure that we will try to do the same. Thank you very much, all of you, for spending the last 35 minutes here with me together on this kind of like virtual space. I guess that I can say you can find all of us on LinkedIn. If you have any questions or if you're great startups, we will be more than happy to get your deck, no matter if you're in Germany, Israel, the US, or any other place. So thank you very much, Henric, Chris, Judith, and Kevin.